Good evening, everyone. Today is Wednesday. It is January the 23rd, and this is the futures in 5 landscapes. We're going to look at the 5 different futures here after hours to see what we look at for after hours motion, how we looked at this morning's motion, and then what the day might look like for us tomorrow. Essentially, we remain landlocked. It's going to be the same kind of environment. Now, are we in a place where resolution is likely to come to the fore? Absolutely. We can see that this line here at 26.27 is very important. And what we've done the last couple of days, because we're continuing to look at a daily chart, because it's that big that we have to step back from it and see what's going on. For intraday traders, this is really what we need to do right now, because we do not have a trend. For us, we need to say, what kinds of changes are we observing? Do we see a shift in the moving averages? No, they're essentially the same. Do we see a shift in the slope of momentum or the strength of momentum? No, we don't. What we do see is a breakdown yesterday and then today's price action that gave us lower lows and lower highs. So that tells me that what we have is sideways formation that could easily grind lower into this lower level of congestion. That's a very big area. We've run up very quickly, and that's got a big volume profile down here. I would not be surprised to see us fade. Am I a little bit bearish on the chart in general? Yes, but the longer we hold here, the more likely that we create a shift. Overnight, it's going to be sideways, and we're going to see that through every single chart. Positioning overnight will be watching for the edges and then trading into the midline and then seeing if it can get higher, or watching for the edge here and trading to the midline to see if it can get lower. That's going to be the best mechanic to use in this environment because it's a cross current. Look what's happening. We're changing direction. Overall, the slopes of our moving averages are shifting direction. When they're shifting direction, we're going to have that cross current. Some of it's down, some of it's up. Everybody's arguing about which direction it ought to move in. And our underlying momentum is still giving us wicks that create higher lows, but we've been stalling out. It came here on Friday. We talked about how important this day was going to be. It was. We started our fade, and now we're holding a higher low in support. If we can get up and over 67.10, we'll move into the edge. But again, nothing but sellers up here. We do not have a standard breakaway formation. Does that mean a standard breakaway formation is not going to occur? Of course not, because anything can happen in the market. What we have to do is figure out from a probabilistic perspective which is the most likely, and then can we position ourselves relative to risk that will allow us to participate in the trade. All right, taking a look at the YM, behaving a little bit better than the others, right? Today we had higher lows but lower highs, so we've got significant price compression here. Down here, thinner volume profile, but we are holding round at about the 24,200. That's going to be another important level. If we lose it, we're going to try and recapture it, but notice the compression between resistance that was here and resistance that is here. That could easily turn into support and take us back to these areas. A lot of whipsaw, easily a lot of whipsaw, and very little follow through I'm seeing from a probabilistic space. That being said, folks, if you break the high and you move past these folks right here, these traders right here, the chart is likely to fade. But if by that time this slope is steeper or we have significant order flow into the chart, it's going to go up into the next line of resistance. And look at how thin the volume profile is right up here for this particular month of December, right? Lots of thin volume up here. So there would be nothing to hold us if all of a sudden the chart began to squeeze or buyers decided that they wanted to participate. So you want to be very careful. Although we're building something that says, hey, this looks very sideways, in the end, you're going to have to be careful on those edges and not assume that it's going to be the same over and over again, because when that levee breaks, it could be quite significant. And the levee will break eventually. We just don't know when. Taking a look at oil, We had a high, what is that? Tuesday, right here, 22nd. This was today. High and a low, lower high, lower low. Brand new candlestick. What's it telling us? You see the price compression between the two moving averages? Even if we didn't have those moving averages, look to the left, and you're going to see price action that is sitting inside a tight box. It's in a range. What do we want to do? If we're trading, we want to see if we can get up and over 53.11, 53.12. That's old resistance. It broke up, went to 54. A lot of traders trying to move the charts into these higher pressures. That is the next area of resistance, 56.30. This area of old support, we keep coming into it and banging our heads on it. It is a very, very noisy place, extremely noisy, and it's going to matter. That is actually going to matter what's going on in the chart up there. Okay, when we definitively lose this or definitively hold it, it's going to matter. Going to have price expansion above that. All right, so the only chart I'm looking at on the weekly time frame is gold, and it's because it's a generally cleanly bullish chart that is coming into its front line of resistance. Right here, it did it 1, 2, 3, 4 weeks ago. And here we are sitting right at the base of support. What's the real number? It's 78. Have we lost that level? Well, yes, we absolutely have. That level's gone down to maybe 74, but every time we come down, we hold it. And that's because we've got bullish motion sitting in this chart. If we shift the template just a little bit, you're going to see all kinds of upside pressure still present, but because we're moving sideways, we cannot just go in here and buy and go, oh, I'm just going to hold it. Those days of doing that without really exposing yourself to a ton of risk, they're gone. Okay? This is a new world, and it is a very interesting place. Great for the swift trader, but the trader who's looking to hold something for a while, they need to wait to have it settle out. Look at how many weeks it took for this chart to settle on its bounce space and how it retraced so deeply. This is a sign of the times. And so if you are buying a breakout, you're going to expose yourself to massive risk no matter what it is that's happening. Traders just are not letting you do that anymore. They simply are not. It's just not the environment there. So stay alert. Watch for the edges. Look for your tighter time frames for things to hold from a support zone. And I'll see you all tomorrow.